You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Jim, thanks again for having me.
People are asking me, have we seen the top to the equity markets?
Jim, we are seeing, I cannot confirm that just yet, but let me say it this way. We do have cracks in the foundation. And when you, with my work, it's about structure. And yes, we have a few of the little markers in place. And think of it as like rolling down a road and you get to an intersection. You have the opportunity to either go straight, continue down the path you're on, or to turn. And when the market runs into these technical junctures, it has the opportunity to continue down the path it's on or to turn. What the market does with that opportunity remains to be seen. But it's at that juncture. It's at that critical technical juncture. And it's the structural developments surrounding what, the price behavior at that juncture. Now, I'm not looking for a 20% decline and go, oh, yeah, we got it. That's not what I'm saying. I'm saying even we need some short to not even intermediate term. We need some confirmation because we've gone through these junctures before and we've seen, and I think we've talked about this, starting back in March of 2014. And let me back up beyond that. As the rally out of the 09 low began, I said it'd go until we got the markers in the proper setup to cap it. Until March of 14, we never saw the first, it never came to that juncture, if you will. And then it started coming to the juncture with basically every, in my world, trading and intermediate term cycle advance. It struggled. And it'd get to that juncture, but it would never materialize. And we saw the market, that opportunity, if you will, for the bear, that opportunity to turn, we'd see it morph away, and we saw it starting to happen even with news. The market would find itself in a critical spot, and someone would speak, or some central bank would make some announcement, or something, or you had the Alibaba IPO at one of those junctures. And so we're at another one of those junctures, and we have to see a little more technical confirmation. It's going to get to the point where once it sets up, it's not going to matter what they say. It's going to be done. It's going to be the die will be cast. But right now, critical point.
Why is it taking so long to hit the top and then have a major downward correction?
Jim, I think it's a couple of things. I think, one, the market is feeding somewhat on itself. And when I say that, everybody knows and has been trained since 09 to buy the dip. They know it's going up. They know that the central banks around the world have our back, so to speak. And so they've been trained like dogs that when the doorbell rings, it's going up. And so I think that's a part of it. That's built into the market. The other part of it is the outright, like I said, even the manipulation that I see with the news itself. And they come out and, make announcements that every time the thing even try to crack a little bit, they're scared to death that this thing is going to implode, and that's why you're seeing the actions you're seeing. So for all those reasons, this thing is strung out. And the interesting thing is, back in, if you're looking at, I talk about the DNA markers and the structure, what that is all about is identifying a way of identifying the top. Because if you get to a point like now and you can't wrap something concrete around it and say, like a checklist, and say, okay, this happened and this happened and this happened and this happened, and this means, every time this has happened, this has been the outcome, then you really don't have anything. You're guessing. And that's what I'm saying. We'd get to the juncture through 14 where you'd go, okay, well, we got this one and we got this one, but none of the other stuff would ever materialize. So it wouldn't solidify the setup. It could never quite solidify. Well, that can has been kicked down the road now for a year. And again, I'm kind of digressing a little bit, but I'm making a point. And so while we're at that point now, And we've seen the can kick down the road where a setup would try to take root and it couldn't, and it'd try to take root and it couldn't. That's for at least two reasons come to mind. One, because the public has been trained to buy the dip. Buy the dip. It's going up. It's going up. It's going up. It's part of the mania, if you will. And, like I said, the efforts to manipulate. I think it's at least twofold. But back in 2000, the market set up with the first setup. Boom, done. End of story. It's set up. But you didn't have that manipulative effort to the point that we have today. I mean, there's always an element, I guess, of manipulation. Everybody wants to control the market, but you know what I'm saying. I mean, you didn't have QE and intervention and Fed governor speaking and, all around the world, every central banker intervened. You didn't have all that. And so the market, it set up, it done its thing, and it was over. Same thing in 2007. Clean setup. Bam. Done. Over. This time, it's a challenge. It can't stick, but it will. I mean, it absolutely will. The insanity can't go on forever. So I don't know if that answers the question or not. I think maybe it does.
I'm wondering about young brokers who just got out of college, got into the equity market business, and have seen nothing but things go up for the last 7 years. They're now 30 years old, and to them, going up constantly is normal. They haven't seen a major correction. Is there a danger there where these younger traders just don't know what it is to see something go down?
Well, of course, absolutely. And no one, look, I remember being younger and my dad telling me I didn't know anything, and it would kind of make you mad because when you're 30 years old and you've been to school and you got an education, you're obviously a bright individual, but, it's not a slap in the face like that unless someone has studied history and they are, more of a market historian and student of the market and not a salesman. Sure, they're not going to understand that. And it's not a slap in their face because everybody, when they're young, they don't understand what they don't understand. It takes time and experience. I'm sorry. It's just the way it is. I was in those shoes at one time. And so absolutely, if someone has only been exposed to a certain environment, then that's the only environment they know. And if they haven't done the research and study to learn otherwise, then they only know what they know, and they don't know what they don't know. So, yes, that's a true story.
We'll have more with Tim Wood right after this.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Tim Cyclesman Wood. Tim, after 7 years of constant climbing, when will we know that we've hit the limit for the markets to go up and that they have to correct and probably make a major correction, and we're not going to see a stop like we have recently where we hit a new high and then all the gains that we've made the last 2 or 3 months are lost, and then very shortly within a week that's been fixed and you're higher than that?
When the setup solidifies, and I know that's not that's a hard concept to grasp. It's not a concrete answer because there is no concrete answer. I will know when I see it. It's like like I said, in 2000, we got the setup structurally. The DNA markers fell in place, and then once the markers are in place, once you have this, and this, and then you get structural confirmation. And when I say structural confirmation, I'm talking about the cycles. The cycle, you'll have a cyclical failure. You'll have a move below a key level that will solidify that cycle. Or maybe you have a failure above another level. Every setup is a little bit different as far as the confirmation because the structure is a little bit different with each one of the advances. And I mean, it's just like, gold or oil or everything else. Each market has its own personal, characteristics, structural characteristics, and so, I can't point to something specific because we haven't seen it yet. But once we get there and the checklist of DNA markers are in place and it is confirmed structurally, it's done. It's done. There is nothing at that point that anybody can do about it. It's done. And because it's locked in at that point. And that's what the DNA markers and all that are about. And like I said, that's what we're looking for and have not been able to achieve yet, but it's tried. And back in 2000, for example, the market set up in, it was in September of 99, actually, we had a Dow theory non-confirmation. Let's talk about this from another angle for a minute. A Dow theory non-confirmation. Well, that was one of the pieces that we need. We had and in that case, the DNA markers were a little different. We had a 4-year cycle advance that had topped in 20 months or less. I don't remember. I think it was 16 or 17 months, 18 months, but 20 months was one of the parameters on the DNA markers. Well, when I say DNA marker, let me explain this. This is a perfect example. Looking back in history, there had been 5 times a 4-year cycle had topped in 20 months or less. And you look at those 5 occurrences and you say, well, what was the outcome of all 5 of those? Well, it moved below the previous 4-year cycle low. Check. That one's there. But there's more to it than that because, you could have an isolated, maybe that's coincidence. So we add other things, other DNA markers to that. And so when you get a list of 5 or 6 or 7 things, those are not all coincidences at that point. They confirm one another. And so anyway, all those things fell into place in January, February of 2000. And the market, if you look at a chart, the market just lingered. It took forever. It just lingered all year. It wasn't until late into the fall of 2000 before the market started going down. So the setup was in place, plenty of time to know about it, and it just kind of lollygagged around for 6-8 months before it started down. In 2007, it happened quick and it unraveled quick. It set up. I remember the high. I remember specifically where I was and everything about it. We had a high in July. We went down into a low in August, and I had was getting phone calls. I was at a computer store and right at the heat of that decline in August, and people were asking me, "Is this it? Is this it?" I said, "No, we got one more push. This is not it. It's not in place. It's not in place." The market rallied for 4, 5, 6 weeks up into mid-October. Bam, done. Everything fell in place. It was solidified, and the thing fell out of bed. And so each setup is structurally a little different. We know what we're looking for, but each one is just a little different, and so we have to confirm it individually.
Where are we in the oil cycle?
I think we are at an intermediate degree bottom. Last week, I have some longer term work that says that oil is going well into the 30s, and I believe that. And I came out with that several months ago, right after, I don't know when that was, maybe October, November. And I believe that's still on. But last week, I started having people email me stuff saying, "Hey, so-and-so saying it's going to $20 a barrel, $10 a barrel, $30 a barrel," all these calls. And I think there was even something on CNN about that. And I'm looking at the chart, and I'm like, no, this is we had a short-term buy signal, and I'm like, the oscillators was telling me that we were at an intermediate degree low, and now we have an intermediate degree buy signal that has since developed. And so where we should be with oil is that there is a seasonality to oil, and I think, we had the low a month or so ago. We undercut that low. I think it was in January. I'm not looking at the chart. We rallied, it failed. We undercut that low back a couple of weeks ago. I think that was basically a retest of the low. I think now we have an intermediate degree low, and we should have a multi-month rally ahead of us. Now, again, I don't know if that rally is going to last 3 weeks or 3 months or 6 months. It's going to last, and this is, until we get the DNA markers to cap that intermediate degree advance and the structure to confirm that the turn has happened. And so, you kind of follow the trail until it turns. But yes, intermediate degree bounce, I think, is underway.
What about one of the factors people have mentioned is that with 2 million barrels a day being produced more than we consume, that very soon all the storage facilities and excess tankers are going to be full of oil, and that could drive the price down when normally we see prices go up in the spring.
You know, I heard the same thing, and a couple of days ago, or maybe it was even yesterday, I heard the same thing on Bloomberg. And, you know, I understand. I totally understand. But I go by the charts, and, you know, they weren't talking about that. You know, the charts told us we were going to have the decline way back, you know, well, I first called the commodity top in December of 13 and then confirmed it. It subtly set up and then confirmed it in August of 14. And you didn't hear those sort of stories on Bloomberg at that time that oil and commodities was going to go down. You never hear the news associated with it's after the fact. I mean, in other words, I think the news is lagging there. I do agree that oil is going lower, longer term, but nothing moves in a straight line. And in spite of that news story, I think we're at an intermediate degree low.
What about other precious metals, gold, platinum, palladium? Where are they?
I don't look at the other precious metals so much. I look at gold and intermediate degree bottom. I think we're going to see. I think many of the commodities are at a position where they're going to be bouncing. And like I said, how long the bounce lasts, you know, until again we get the setup to cap it. But intermediate degree bounce.
Tim, anything else you wanted to throw in?
Well, I guess that's it. I can't think of anything else. I hope, you know, that maybe that explained and it wasn't too wordy or whatever about the DNA markers, you know. I hope maybe that explains to people that, you know, you kind of go with the flow until you see the evidence that you need to see with any trend, be it up or down. And I guess the message is that, you know, look, I know that this is a very, very, very extended 4-year cycle advance. There's no question about that in my mind. And the statistics tell me that it's going to be hell to pay once it does turn down. But again, we have to get that setup solidified. And, you know, we're at an important juncture. Let's see what happens.
Thanks a lot for chatting with us.
You're welcome.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.